Good evening, ladies and gentlemen, and welcome to the show. I'm going to talk about some things in tonight's show that are coming up imminently in our future, very, very soon, that could profoundly affect the price of Bitcoin. And not to the downside. This is the good news, guys. Not to the downside, but affect the price of Bitcoin to the upside. In fact, it could be explosive, the amount of energy that could come into Bitcoin and into the Bitcoin space. Let's get the charts open. Let's start the charts right here and take a look at what's going on. You know, the Bitcoin price has been awful stagnant lately, maybe slightly bearish. You know, it's at 265 billion tonight, 69.9% Bitcoin dominance. And we see the coin's basically been going along sideways. Now, an awful lot of people have starting to lose interest a little bit, you know. They're holding on to their investments, but it's kind of boring, you know. It's been going along sideways or a little bit down, you know, and this gets people in the dumps because they made these investments. They want to make money on cryptocurrency. You know, that's what people want to do. They want to make money on cryptocurrency. And they can see the potential of cryptocurrency, and they're like, when? When are we going to see these big price increases in cryptocurrency? Well, there's things coming along that we got to really talk about. This is one of the big important things right here. Worried Hong Kong residents are moving money out of Hong Kong. The local currency, which is the Hong Kong dollar, has weakened rapidly since early July. And this move, as analysts attribute to partly to outflows of the currency. Now, here's the thing about it. There's a peg between the US dollar and the Hong Kong dollar. And it's coming to a point now, in the next few months probably, where anybody in their right mind is going to start moving out of Hong Kong dollars and moving into US dollars. And that has to be supported. In other words, say you got a guy in Hong Kong, lives in Hong Kong, and he's got $1 billion, and say he decides to move that billion Hong Kong dollars into US dollars. Well, then the Hong Kong dollar goes down. And what happens is in order to maintain that strict peg to the United States dollar, then the banks in Hong Kong have to inject liquidity in. They have to, in other words, use their own money to make the Hong Kong dollar worth more then. And this has worked in the past because Hong Kong has been such a strong economy. It's always bounced back and bounced back and bounced back. But right now we're dealing with a situation with these trade wars and all these situations going on right now, and fear, and these corporations that are in Hong Kong, huge corporations and stuff, could start pulling the plug, and the Hong Kong real estate market could start rolling over. This could create a tremendous situation in the world's financial system. Hong Kong peg. Now, there's a fellow out there called Carl Bass, and he is bet against this peg. He thinks this peg is going to collapse and fall. And I think he's done his homework. I think he's right. I think this thing is going to fall. Says this summer's protests against the proposed extradition law with China have shaken Hong Kong to its foundations. But when some of the protest movements tried to put the squeeze on the city's financial system, the local currency has long been pegged to the US dollar. So what's happened is these protesters couldn't break the peg. They tried to pull their money out of the bank, but they don't have enough money. The big money, though, that's in Hong Kong could start to get very worried, and they could start moving their money out of Hong Kong dollars into US dollars, and this would put tremendous pressure suddenly on this peg. And I don't think that they have the firepower. It says, in an investor letter sent this month, Mr. Bass claimed that the HKMA had spent 80% of its reserves, which he identified as the aggregate balance, over the previous 12 months, leaving it with precarious little firepower to defend the peg. Hong Kong currently sits atop of one of the largest financial time bombs in history, he concluded. And I happen to agree. This is huge. This is huge. This could cause such disruption within the financial system. And we all know which way gold, silver, and cryptocurrencies go when this massive disruption hits. We've seen the results, you know. Quite recently, we've seen the results of what it did to gold and silver. Uh, so this peg could break suddenly. I mean, these guys that are holding the peg together, the HKMA, which is holding the peg together, sure, they're not going to come out and tell you that the peg's going to break, because if they told you that, everybody would rush out of Hong Kong dollars. They're going to make it seem like it'll never break, how they can keep it up forever, you know? That's what they're going to do. But in truth and reality, this situation, things like this happen really fast when they happen. So if the Hong Kong peg breaks to the dollar, it could break really, really fast. In other news, Tether is launching an ERC stablecoin, a new one, and it's going to be pegged to the Chinese yuan. There you go. They're going to make another one. One pegged to the dollar, another one's going to be pegged to the Chinese yuan. Now, Bitcoin itself has been quietly growing. I mean, even though the price isn't really going anywhere, right? It's growing stronger every day. And this article lists the 3 ways it's growing stronger. Mining power is at all-time highs. I mean, this is a really bullish signal to me. See mining power moving up like this. The miners always know ahead of time. They're not going to mine it if it's not profitable. And I'm going to tell you what, unless you've got really cheap electrical costs, it's not profitable to mine Bitcoin anymore. But here's the thing. For you guys out there right now, you know, say you got a really cold basement in your house and winter's coming up. We're in the fall time of the year right now. Mining machines create a lot of electrical heat, you know. Heat comes off of them. That's what happens. Heat comes off of them. And I would say that, you know, that helps the profitability margin hugely. So you can just about break even with the amount of Bitcoin that you get, almost. I mean, it'll take up a good chunk of the electrical costs anyway. And then the mining machine, if your house is cold, you know, and you got a cold basement, put the mining machine down in your basement all winter and let it run all winter mining Bitcoin, and it keeps your basement warm. And it's almost like free heat, almost, because there'll still be, I don't think the Bitcoin would quite pay for all of it, but this would be a good time of year, you know, to buy a mining machine, hook it up properly. Now, what I say by hook it up properly is, I'm not really recommending it to you guys because you need an expert to hook the electrical part of it up properly so that you're not going to have any sort of problems, you know, like mining machine get really hot, you know, and you got to have that figured out so that you're not going to have some sort of a problem where the mining machine lights on fire or anything like that. You got to be careful of that. That's one thing you got to be careful of. But it can warm your basement and keep your house warmer, a lot warmer. At the same time, it pays for probably most of the electricity that it's consuming to do that particular job. And so this is one way for people out there to get a little bit of Bitcoin between now and next spring, you know. And if the price shoots up, well, you're going to see the mining difficulty increase, but at the same time, the mining difficulty increase is not going to keep up with the big raise in price of Bitcoin. And so you might even do better than breaking even. Active developers per month has remained steady. So Bitcoin developers is consistently getting 100 new developers a month ever since 2014. Bitcoin's output per day metric is growing strongly. And they're considering Bitcoin. They really are starting to make the transition, investors, to consider Bitcoin to be a safe haven asset. That transition is being made while we speak. Uh, so we got to worry about this Hong Kong peg to the dollar. And we got to worry about Brexit. Okay, I'm going to tell you guys about Brexit just for 1 minute as I finish the show here. Boris Johnson, the Parliament in the United Kingdom is gone into recess now, you know, and they're going to be in recess for a while. When they get out of recess, I think it's on the 14th of next month. Then they're only going to have a scant few days until the end of the month when Brexit is due, and they've put a law through to try to stop Brexit, and it's been passed off. It's been signed by the Queen, so it's law now. And it requires Boris Johnson to go and ask for a delay. But I really, first off, he said he won't go and ask for a delay. And even if he did, even if he crawled on his hands and knees to ask for a delay, it's very possible that the European Union is just going to say, okay, we're not going to give you any more delays on this. No more delay. Time is time. So it's very, very likely now at this point in my mind that Brexit's going to actually happen in a little bit over a month from now. And it's going to be a event that is going to take the financial system, I think, by surprise. Because even though they know about Brexit and everything is staring right in front of them, for some reason it's like they've put it on the back burner and they're not paying too much attention to it. And they certainly have not priced it into the markets at this point in time. It could cause a massive turmoil within the markets. And the thing is in this turmoil, you see what happens to these alternative assets to the dollar. Not to discount all the things that are happening to erode the stability of the dollar, because all of these countries are starting to move away from using the dollar for trading in oil. It's happening while we speak. They're setting up their own alternatives to the SWIFT system. It's eroding the dollar's status as the world reserve currency. We all knew this would happen. It was set in motion the very day that Nixon took us off of the gold standard in 1971 when he closed the gold window. That was the death of the dollar. And it's taken a long time, but we're right on the verge of this whole thing just kind of collapsing and into an enormous mess. And in this mess, in this movement, the world is going to be looking for another way to do business. And this new electronic digital currencies is the way they're going to go. Because it moves so fast and it's so effective to use it over the internet. It's so easy, and everyone in the world now lives on the internet. We're not like we were back in the Middle Ages when we carried a coin purse with us and we had these little gold coins and we used to bite on the gold coin to make sure it was gold. This has been absolutely proven that this is not the way we are anymore. We're a modern society. We don't even recognize, most of the people on the street don't even recognize what gold and silver are anymore. But they do recognize what their credit card can do and what their debit card can do. And this is the kind of world we're moving very quickly into. It's a world that's electronic and runs off of the internet. And cryptocurrencies fits into that world. It's a round peg into a round hole. Gold and silver are a square peg trying to fit into that round hole. And it just is not going to work anymore that way. So, as far as currency is concerned, I don't ever see gold and silver actually becoming a currency. I see gold and silver becoming a store of value, an alternative to the dollar. Whereas I see cryptocurrencies actually becoming both, especially when you consider Bitcoin. Bitcoin is like a new gold standard in cryptocurrency. Listen, I'm rambling on a little bit. Thank you guys for listening to this show. And give me a thumbs up, and we'll catch you guys in the next episode. Bye-bye.